digitalization, disruption of insurance. So what are we going to do? What is the new world of insurance looks like? InsurTechs are popping up. So are we really ready? I will try to, as quickly as possible, I will try to see and show that what is been catching up. These are the highlights. Can you all see the slides? Yeah. All right, perfect. So these are the areas that I'm going to, if I'm being allowed more time, maybe probably I will focus. That's very important, I believe. The last point, the roadmap to insurance of tomorrow. What should we need to do just to cope up the coming challenge? Look, this has been unprecedented change in the insurance world. They are calling it the new world of insurance. We have been called traditional insurers. We are no more insurance companies. We are called traditional insurance companies. The new InsurTechs are popping up. You know, technology has brought all these changes and developments. So most importantly, the consumer side. Consumers are not entirely happy with the way we are selling our products. You know, selling the policies through that long and tedious procedure. And when claim happens, also just filing your claim and praying and waiting that claim be paid. So this is really affecting both the consumer side and also the insurance side. So the technology is reshaping our world. And we have to really see what's happening to our market. Now, a new take on the digitalization. Digital, even it has transformed the way we discover, engage, transact business in every form. How many of you are now paying your bills through your phones, your water bills and things like that? Why not insurance? Most of industries are already doing that. So, and most insurance companies are now incorporating digital into their operation. Implementation of new capabilities. It is because that I'm going to show you on the next slide. For instance, now they have this new name, FAMGA, Facebook, Apple, Microsoft, Google, and Amazon. You know them. The big techs, they're controlling the whole world. And then now they have given them FAMGA. And Tesla, also the new company who's producing electric car. Their market capitalization is USD 4.3 trillion. This is from 2018 up to 2020. It is 2.5 times the total market capitalization of the 30 largest insurance companies that were globally invested. Look, a completely new competitor are coming from a different perspective. They have got, look about Facebook. They have, what do I call them? The second world, the population of next to the whole world. Facebook has the next population. They have the whole population, Apple, Microsoft. So they are investing hugely in the insurance industry. This is what I show you. InsurTech now. InsurTech, they used to be, you know, new kids in the town. InsurTech is coming. No, now they have invested heavily. And even they become now their own categories. They have 3 categories now. Full carriers, like what we do. There are InsurTech companies that both develop and distribute insurance products, and there are also distributors. They take the InsurTech part and dispense the different insurance companies' product, and enablers. Most of them are the ones that cooperate or collaborate with the existing insurance companies to sell the company. Even they have already now their categories. Emerging, look, this is a study by Capgemini very recently. There are 50% plus customers willing to buy insurance from the big tech companies. This is a very scary news for me. And during the pandemic, 30% of the customers already tried them. This is a very study that shows. So now, what are the emerging trends? Now, automation replaces human efforts. You will have a digital advisor. Just click on your mobile or your web page and ask whatever knowledge that we have rarely provide for our customers. Now the robo-advisors are going to do every advising. And surprisingly, the study shows that 7 out of 10 customers are willing to take advice from the robot rather than the traditional way that we do. So this is also something we need to really consider. The next very important aspect of the emerging trade is convenience replaces price. In the olden days, price comparison, currently what we are doing in our market. No, price comparison reduced to the market, a bargaining basement, no way. As you know that brokers play a critical role. When you are transacting your business digitally, service has automated, so it has been jumped. So the brokers also being disintermediated because of the direct transactions that customers are having with the Beware. But another study also shows that the brokers are die-hard and they're coming up their own way of challenging this approach. So in the on-demand insurance world, the most important issue is convenience. So the studies, again, the Capgemini study, the recent study says 3 critical elements that we have to focus on: convenience, advice, and reach. We have to be available wherever the customer is, be it in somewhere in the bushes or in the town. We have to avail ourselves digitally. And convenience, he has to buy, or whoever is willing to buy our product should have the convenience of taking, without those tedious approach of proposal forms, things like that. I haven't surveyed your vehicle, I haven't should it. It's not going to work. So remember, these 3 things are reshaping our world. Premiums becomes highly personalized. Telematics, Internet of Things, smartphone apps, wearables, everything. Now, no more me and Nazanet, we are the same people, we have the same cars. We used to rate our car. No more like that. You have to rate me separately. You have to rate Nazanet separately. It's because of the wearables things. Do I drink? Do I drive early? Do I go? How many hours do I drive in a day? It is no more the year of make of the vehicle, the year of the fabric, or the semi-insured. It is me, the insured. So this is the premium, personalized premium. The next thing, the line between the old and the new are blurring now. You know, I am this company, a company who has built a tremendous image. No, the new generation, they're not considering that. All they need to do is, are you available? Are you convenient? Are you smart enough to deliver my products? So you see, even our reputation that we built through the ages it's been in trouble now. So digital engagement through lifestyle apps, it's changing the dynamics between the insurer and the insured. This has given the insurers, a better understanding of the behavioral pattern of different individuals, different insureds. Now it's being customized to the level of because thanks to the data, thanks to the technology. So this is what's happening. Now, the other thing is the product. The all-in-one insurance policy is here to stay. We have to avoid our motor, fire, burglary, allied. No way. It's not like that. It's me, my car, my home, my pets, my relatives, my family, my liability, whatever. So one insurance policy for all the things I'm doing. So just insurance are also giving overarching policies, and it will help them to flexibility and also adjustability. The insurance ecosystem or supply chain. In the olden days, that's what we do. Here is a customer, then an intermediary broker or agent, then comes the insurance company, then comes the reinsurance, retrocession. That's the direct line. No way. Now is called a new insurance ecosystem. The customer is in the center. The InsurTech company, reinsurer can directly finance the InsurTech company or the other player in the market. So not through us only. Even they can directly finance the reinsurer. So it's fundamentally disrupting the insurance model that we know. And this is happening. I can give you plenty of quotes. Claim settlement. The most, issues that we have been, so I will jump because I have 2 minutes. Because let me go. Maybe I will send you my emails. This is very important. Underwriting claims, just democratizing. Let's rethink the possibilities and let me now omnibus coverage. Traditional standalone class business such as motor, fire, life insurance products fused into a single product. Customer buying directly from a single carrier. All the insurance needs purchasing policies from multiple carriers through front-end aggregator. You know that front-end aggregator is, that could be an InsurTech company. Usage-based insurance, that is the new norm. You usually buy insurance policy for 1 year. It's not going to work this time. All I need is, where do you pay for your phone? When you use it, right? This is going to happen for insurance also. You drive from point A to point B, you only cover that. So we call it usage-based. You are driving your car from Addis Ababa to Awasa, period, cover for that only. You park your car, you don't need cover. So you see, it's customizing the cover. So even the PA-wide is pay as you drive. Usage-based is coming to pay as you live, even for all other class of businesses, unless you live, unless you don't need the coverage. The other very important aspect is now this Internet of Things, telematics are predicting the likelihood of insurance. Because of that, now accuracies, even in mega risks, in flights and bigger things. So because of the prediction, there is a possibility that we are avoiding claims, occurrence of claims. Because of that, so there is a danger that we might even decrease our premium. The most important, because of the self-driven cars, they predict the possibility of crashing roads, even the changed roads. So people no more interested in every motor insurance, where with 70–80% of our premium is being relied. Now let me conclude. That's the negotiation part. Let's come to our industry and look. This is our scan, the current scan. Everyone fishing from the same red pond. This is our industry's red ocean. Industry lacks dynamism and integration. Our market is heavily dominated by what? Affiliations and affiliated businesses. It's a tight regulation we have been talking about in the morning, and very slow pace of growth, and low density and penetration still. So our operation is still heavily dependent on manual. Even some, said, እስካሁን የሎይድ ትልቁን ሬጅስተር የምትጠቀሙ አላችሁ ብሎ there are people who joked on me. So is it possible? Yes. Number one, just three remarks only. Number one, we have to shift our product mindset. Today insurers think in terms of specific product class of business. No. This is can you see that guy with a drill? That is a very common experience I always use. When someone want to buy a drill, what actually is that guy want to buy? A hole. Thank you. So sell a hole to the customer, not the drill. So the customer-centric product, that what we have to offer, not our product that shelf-it, water fire, no more. Just let's sell him the. Number two, we have to be customer-centric. This is obvious. I have to jump it. Everybody. But let me emphasize on the last point. For instance, Starbucks mission statement is now to inspire the nurture human spirit and person in 1 cup and 1 night per time. But insurance, especially in Ethiopia, our motto is, we're cheaper. Try me. Where are we going with that? So this is the graph that shows, the study recently shows that, from commoditization to the level of information control world. And finally, we have to go digital. Let's work on that.